Welcome all to the Node. I am Mike, aka Veteran Crypto, and with me as always is David from DeFi University and also the Node. How's it going, brother?
Good afternoon, Mike, or good morning. Good morning to you.
Good
I'm doing
morning to
okay,
you. Well,
man. Doing okay. I see
it's
that we're
actually
going to be
just past
talking.
afternoon for you.
Yeah, just past afternoon for me. I'm looking forward to talking about stable coins because I put together this piece of research yesterday about stable coins and interest rate arbitrage and
Yeah,
statistical arbitrage, dude. I put together some great stuff.
it's kind of funny we talked about stablecoins so much yesterday because that seems to be the hot news right now on crypto Twitter and a lot of people looking for clickbait, talking about how and there is cause for concern, but and we'll get into it here in a minute. But a lot of people are talking about how we're not going to be able to earn yield on our stable coins, trying to get engagement and stuff like that. And here we're no hype, no clickbait. Yes, there's cause for concern. If potentially, if this legislation passes as written, then we won't be able to earn yield off of just static stable coins. You can't just deposit them, with Coinbase or something like that and just earn, that 5% or something. However, activity-based stablecoin yield you can earn. So if you're providing it for liquidity, if you're providing it for cross-border payments, in liquidity pools for swaps, things like that, you can still earn yield. So it's important to not just look at these posts, engage with them to, and feed that machine. Make sure that you're doing your own research. Don't just take these posts for face value. So with that, let's go ahead and let's add you to this one. So if you want to join the conversation, like Big Lou over here saying yo yo yo, good morning. Come on over here to our YouTube channel at the node_channel. It's where you can find all of our shows. We're a network. I should have named this the Node Network, not the Node Channel, because we have so many different channels. So, of course, we have the Node Monday through Friday, starting at 9 a.m. Pacific, noon Eastern. And me and David, for 2 hours, we have actually a bunch of great guests coming up. Actually, Shawl, right before we went live, Shawl Kafur from Canton Network confirmed that he'll be here this Thursday. And we're going to dive into Canton Network and the updates and what's going on with them. We have a bunch of other Dagnum from Constellation Network. Dag is going to be coming on the show, I believe, next week. I have to look at the calendar. He's confirmed. So we have some really good interviews coming up that I hope you'll join us for. So yeah, that's just one show. We have Crypto and Chill. We have that on tonight, myself and Jeff. Jeff has his own show, the Blockchain Report, where he dives into early projects. If you're into getting in on some of these projects early, sometimes so early, they haven't had the token generation event. So he's big into farming. So, he'll go in and, he helps them test out networks and protocols and things like that, and potentially earns airdrops. So, if you're into that kind of thing, definitely the show to watch. He's been doing it for years. DeFi High, Don, immediately after this, Monday through Friday for 30 minutes, talks about or walks you through entry level DeFi. This is what me and David started, and it evolved into what you see now. We also talk about small business. So Don is a very successful business owner, and I've worked in operations, as COO and of multiple companies, both tech and otherwise. And so we talk about the starting small businesses and running small businesses, and some of the pitfalls and some of the hurdles that you have to deal with, in doing that. So if you're an aspiring business owner, definitely something to watch. We just stood up. I did a little introductory video last night on sovereign soil. So a lot of people know my background in the military. Sorry, I got distracted by some deer walking by my window.
Squirrel.
Squirrel. I live out in the middle of nowhere. I got out of the military, had a bunch of real estate, sold it all, moved out in the middle of nowhere, bought 20 acres, built my own cabin with my own hands, lived in a tent. So I'm a homesteader. And I've been big into emergency preparedness. I actually had a small business for a while selling supplies. But my buddy Drew, over at Blockchain Basement. He is a homesteader as well. We're both very passionate about self sovereignty, not relying on supply chains and government and things like that. Just being self sovereign. You'll be responsible for yourself and your family. Started that channel, and so we're going to be ramping that up. Kind of giving lessons on how to do that if it's something you're interested in. David, he does daily market wrap ups, and we talk about the markets at the beginning, and he talks about the markets at the end. A little bit of a bookend. So that you kind of understand, what we're seeing going into the day and what we're seeing coming out of the day. Jeff, he loves being a DJ. We have music going on. We have the red pill, where basically it's where all of us get drunk and talk shit to each other. So if you want to just hang out, have a drink, listen to some conspiracy theories and things that piss us off about government, and we discuss religion. We've discussed the mushrooms, the medicinal value of magic mushrooms for PTSD and things like that. We've talked about all kinds of stuff. So that's interesting. Ellie and Jay from our community have started streaming gaming. Right now they're on Arc Raiders. Super fun game if you haven't checked it out, but there's that as well. So as you can see, we got a lot to choose from here. So if you're interested in any of that, this is the place. Next up is our X account. Oh, hold on. Where are we going? Where are we going? Where's it taking us? Oh, to my personal account. Let's go back to the Node account. If you want to find us on X, here is our profile. It is at the Node channel, no underscore. And you can see we're live there as well. Oh, and then we also got the our official website that David's been putting together and doing an amazing job, I might add. It's thenode.pro. So if you're interested, as we go through the news and you want to dive deeper, I post links to all of our sources. Everything we talk about here is we find multiple sources for the information to verify it. We're not about clickbait. We're not about gotcha moments in our interviews. We're about integrity. We're going to ask the hard questions during interviews, but we want you to get all the information, both good and bad. And then you need to do your own research and draw your own conclusions, based off of all of the data, all of the information. We're not just here to spoon feed you. So, there's plenty of those shows out there. So, but on this site, you can access DeFi University at no cost to you, a full course of entry level with DeFi high to intermediate to advanced strategies like looping and other strategies, hedging that David teaches. It's all very well structured. You have quizzes and to make sure that check on learning. We have private coaching if you want to accelerate. It's it costs a little bit of money, but if you want to accelerate your fast track your learning, and you want David in a one-on-one call to go through your portfolio and kind of assess it and give you tips and give you his take on it, that's a great resource to use. We have our AI newsletter that's about to launch. You can actually come on the website now and see it and use it, but it is going to be paid here soon. It's going to be $20 a month, but this is sexy as hell. You get to choose what you want in your newsletter. It is custom made for the assets that you are interested in. I have not seen anybody else offer this. I'm sure that we're not going to be, this isn't going to be forever, but we are the first ones to do this that I've found. Is you select the assets you want, stocks, commodities, crypto, whatever, and generate it. And it's going to give you the trading ranges. If you're into trading, it's going to give you the lines of support and resistance for your assets. If you want to get into liquidity pools in DeFi, there's news. And again, it's all sourced. You can click on the hyperlinks. It will take you to the article. You can read in depth about it. This is not just randomly generated, AI stuff. This is well-sourced information and data, and even the trading ranges and stuff like that. That's all linked. So you can go and look at how it, picked those, lines of support and resistance or those trading ranges. Trust but verify, or trust and verify.
I think
We
it's
also have
verify, then
Vera-
trust.
yes. You also have the store. So DeFi Don has been working very hard on designing some hoodies, some hats, beanies, things like that, T-shirts. If you're interested, want to help support the channel, we're going to be putting those up for sale. You want to represent the channel, we greatly appreciate it. And then, of course, you can find us live. You want to represent, you can find us live here, and you have the chat over here that all lumped into one. So great one stop shop for everything that you're looking for.
Pretty cool.
So
It's pretty cool.
yes, it is. So with that being said, anything that you want to add to all that, David?
Give me like another week, to finish that up.
Mhm.
I really want to put all of the bots, the open claw bots, at the top of the list. But at the same time, I know that I've got to finish up this website. It's just that finishing the open claw bots, I think, is maybe a little bit of an easier, maybe not easier, but faster thing for me to complete. Like going through the courses on the node.pro and making sure that those are all, finished. That's going to be probably the most time consuming thing. The community with school and Discord, that's, really, really easy. The coaching, that's already set up. And then, any type of, private coaching that you want to do for emergency preparedness or for DJing or for literally anything, maybe small business coaching, something along those lines. That's really, really easy to build in. The newsletter requires, having the account functionality built out.
Yeah.
And then the store itself also does. So those are going to be, with, I'm going to
Basically a
build those
CRM.
out together. Yeah, they require a CRM. But the bots, the OpenClaw bots, I built 4 of them. And this is what they do, dude. It's so cool. So Bob in accounting is going to just pull read only from all of our different accounting sources, whether it's Stripe or whatever, pulls from all of them and then produces a single report that's published in Slack every day, every week, and every month. So that's Bob in accounting. Then we've got Anna in analytics, and Anna just pulls from all of the different, social media platforms, banking platforms, everything, but just analytics, and throws it all together into one report. And then you got Steve in socials. And what Steve does is he just downloads video content, sends it to Vizard, where it's chopped up and posted. So that's his only job. And then we've got Sam in broadcasting. And what Sam's going to do is just basically run the radio station. So when we're not live broadcasting here, Sam is going to be running music. And, I put together some ideas of how to generate that music. So yeah, dude, Bob in accounting, Steve in socials, Sam in broadcasting, Anna in analytics. Those 4 OpenClaw bots are basically going to, run the business for us. And then all we've got to do is show up every day.
Honestly, dude, I hate to say it, but that's one of the things I'm most excited for, because social media is such a grind. Because I got my personal account, Veteran Crypto, I got the Node, I got the old DCA channel that that we're still running, and and then of course all of the trying to promote all the different shows, and just staying up with the topics, and commenting on different things. It's just so many plates to spin. And so, yeah, having that stuff, and then of course, the accounting and the other aspects, the music, and it's going to free up so much time to where we can focus on just making better content for everyone out there. So I appreciate all you do, man. I really do.
Yeah, man. Yeah, no, it's great. It's a lot of fun. And give it like another week or 2 until it's like all like running, hopefully by the end of this week, depending on how many hours I have today, tomorrow, and Thursday. But I tend to get the most work done, Mike, really on Saturdays, like Saturdays and Sundays.
Was it today and tomorrow, or was it tomorrow and Thursday? I didn't see the calendar invite that you were wanting to get together.
Oh yeah, no, I haven't put anything out there yet, but I think if I just check and take a look real quick, I've got a 2-hour block today, so we could definitely work today, and then I've got on Thursday a 2-hour block.
Perfect.
So yeah, either of those.
So to answer your question, not Scoop Boy, no. We're actually working with one of the community members. He basically creates AI generated music, so custom music, and he's generously offered to make us a bunch of original music that we can put on the channel in between shows, like David was just talking about, so that you can have it playing in the background while you're working, doing housework, choring, working out, whatever you want to do, and it's just going to be basically like the Node radio station. So
Exactly. Yeah.
yeah, because we don't want to get the copyright strikes and all that stuff, and so yeah, it's going to be all original music.
Yeah,
So
it's going to be pretty cool, man. We've been, DeFi Don and I have been going back and forth talking about exactly how to execute on that. And
mhm.
I was thinking that maybe we could use an open claw bot to, call the bot like Bob in music, like Bob Marley or something. And the bot, what it does is, so these claw bots, you've got to get them,
Oh,
give them
it needs to be
really,
called
really
WKRP. It needs to be called WKRP. Remember that old show
WKRP.
WKRP in Cincinnati?
Oh man, I think wasn't that one of the radio stations?
No, it was,
Well,
it
I
was a
don't.
really old sitcom. I think it was like in the 80s or the 70s when I was a kid. And it was like WKRP in Cincinnati. It was a comedy.
Uh,
We should just call it WKRP.
I mean, sure, man. Like I'm all for that, but so the way that you got to set up these open claw bots, you got to be super specific with what you tell it to do. So it could go something like this: Hey, WKRP bot, I want you to go ahead and dial in to the Sono API, and I want you
Mhm.
to create, 20 5-minute long instrumental tracks based on, this maybe like a little bit of a lo-fi beat. And then I want you
Yeah.
to take them to a piece of editing software and stitch them together so that it turns it
Mhm.
into one big loop. And then
Yeah.
once you've done that, deposit that into a Google Drive. So,
Yeah.
that's how you could create that type of thing. But
Mhm.
yeah, man, looking forward to it.
No,
Looking forward to
no,
getting those bots.
it's going to be cool once we get all this dialed in. It's
Mhm.
just going to be autopilot, and I love it because, like I said, then we can just focus on good quality content and just keeping our finger on the pulse of what's going on. Speaking of which, let's jump into some news. Man, what is up with my eyes?
I don't
All
know.
right.
You got to get some honey, man. That bee
Oh,
propolis or whatever. Yeah,
oh
I got
no,
some
no,
of that.
it's not allergies. I just my eyes are just freaking dry. Yeah, I know. I have I put local honey in my tea every morning, so I'm daily. I'm doing that because it does. It helps. All right. So right out the gate, let's talk about um, let's talk about the Trump dip. So, risk sentiment briefly surged after President Trump claimed progress in secret diplomatic talks with Iran. However, Tehran denied these claims, and the the volatility index that David always references, remains elevated at 26, just over 26. Is that what you're seeing, David?
Yeah, Mike. So when I take a look at volatility, volatility is a mean reverting asset class. And so the fact that year to date we've seen, and I can go ahead and share my screen real quick
Yeah,
just so that
absolutely.
we can see this together. So, the fact that we've seen vol year to date do nothing but expand. You see this? This is an expansionary volatility regime. So I can use all of these stupid pieces of jargon from Wall Street to talk about this shit, right? This is
Yeah,
an
yeah,
expansionary regime. Don't you know? But like basically, man, that's what this means is that uh, investors are paying more for protection. That's what this means. So this measures at the money options on S&P front month listed options for the S&P cash index. So this is a measure of investor fear, people like to say. And so when you see volatility expanding like this, and then yesterday, on the heels of President Trump's remarks, you can see this big red candle yesterday, but we closed off of the lows. You see, yesterday, there are the lows down there at like 22 on the VIX. This is VX. This is the futures contract. So the lows were down here at 22. We closed off of them. We closed at 24, and volatility is expanding a little bit today also, with the S&P and the Nasdaq down just a hair. So here's the thing, volatility tends to mean revert, which means you would expect volatility to compress all the way down to below 20, maybe back down to its 200-day moving average. The fact that that's not happening and vol continues to just be in this uptrend tells me that maybe we haven't seen that blow off top in volatility yet. And the thing that I'm watching to really help me gauge, whether we're going to have some type of blow off top, two things. First thing is crude oil, because with everything going on in the Middle East, and it seems as though whoever's like, have you seen the guy who goes on TV or goes on, like, not even TV, he's probably in a bunker somewhere, some Iranian guy, dude, he really does not look happy. He's like the most angry, fucking evil looking guy. And he goes on, like, their state TV, and he says, we are not talking, we are going to strike or whatever. So
Yeah.
all of that uncertainty with the Strait of Hormuz, it seems still under threat, and all of those producers still shut in. It looks like crude has nowhere to go but up.
Add to that, I think there was a big explosion. I glanced at it. There was a big explosion down in Houston.
Yeah, I saw
Down
that.
where Jay's at, that does our gaming stream. I need to check on him. But yeah, I mean, that is a huge, Houston, if you don't know, is a major refinery, oil refinery area. And, it's on the coast. So it's where a lot of like Texas oil and, a lot of oil is, shipped and, things like that. So, when something like that's impacted, it's going to, it's going to affect the supply. So sorry, go ahead.
Yeah, no kidding. I mean, look, I really, really hope that was just a horrible accident. I mean, and not some act of war here, on our soil.
That's very, yeah. No, I know. I'm glad that you bring that up, because I mean, what's to say that it wasn't, some, potentially, terrorist act? They don't know yet.
Who knows? I'm sure that we'll find out, hopefully. But even without knowing whether that was a terrorist act or not, I think the path for oil has to be up. It has to be up. And so if the path for oil is up, well, then it's likely going to continue to push interest rates up, as a rising price of energy is definitely going to feed through into inflation expectations. No doubt about that. And so that means rates have to go up. And so if rates have to go up, then the dollar probably also continues to push a little bit higher. Look at this resistance on DXY at 100.5. Like, this is the line in the sand. Get above this, and then all of a sudden the dollar could really rally, man. The dollar could really rally. And what would that do to digital assets like Bitcoin? A rallying dollar, probably not bullish for BTC. Probably also rising rates on the back of rising energy costs. Rising rates would likely push stocks down. And so we've already seen stocks, roll over here, but now it's just a matter of really closing below that 200-day moving average. And we get a couple of more closes below, and you might see the VIX, as we were talking about at the beginning of this, you might see the VIX start to really expand. So, we're sitting at 2450 right now. That's the VIX futures. If we take a look at VIX, that's the calculation, sitting at 26. So 26 is not complacent. 26 is an elevated level of volatility. And notice where the VIX bounced from yesterday. So I've got this 20 level marked on my chart because above 20 is, higher levels of volatility. Below 20 is, more complacent levels of volatility. So we bounced off of 20 yesterday and, still kicking around in the mid 20s. This is high. So we get another push higher, and that would be enough to send the S&P sharply lower. But the S&P has been battling on the way down, unlike what we saw last year, much sharper moves this time of year last year on the way down. But this year, this has been a much, much slower move, just slowly rolling over. So you might even see a little bit more of a bounce here, especially if we, don't see crude oil push higher. So yeah, man, a lot going on in
Let's
markets.
Well, let's fold this in. So this is another thing that I found when I was poking around today was the manufacturing signal. So maybe plug this in to what you just talked about, and kind of educate us all on its role, and kind of what you see coming in the market. So markets are closely watching the March flash PMI data for the Eurozone, UK, and US, looking for signs of stagflation as energy costs continue to bite. So how does that play into all this?
Well, when I think about PMIs, purchasing managers index, that's, basically like a leading indicator for inflation. But when I think about like a manufacturing signal, I think about ISM. So both of these are, important when we start to think about what should our future expectations of inflation be. That's the important thing here. So when I think about ISM, I'm thinking about, are we going to really push above 50? So the index now, I think, is above 50. That's expansionary territory. That means, strong growth in new orders, strong growth in production. But it can also, you can use this as, an inflation warning. So you can take a look at prices paid. That's a sub index within the ISM manufacturing index. So take a look at prices paid. When you see that really jump higher, that could mean, another bout of inflation. When you take a look at something like, a flash PMI, the PMI, the Purchasing Managers Index, that was the first thing to really push higher, uh, you know, after COVID and like during COVID. And it turned out to be a great leading indicator for inflation because that was the first read that we got on that inflation. That inflationary impulse was it fed through to the PMIs first, so we could see it in Purchasing Manager Index readings first, and then you got it in CPI, which is the consumer leaning calculation. And also, they've changed the way that CPI is calculated so much that it's almost not as valuable anymore.
Mhm.
But still, it's what the Fed looks at, or at least it's what the Fed says it looks at. I think that the Fed probably looks at rates on the 2 year more than anything else. So rates in the 2 year have been pushing sharply higher. And all
Mhm.
that means is, hey, maybe inflation is coming back a little bit, and rates need to go up in order to combat that. So if you recall, Mike, the last Fed meeting that we had just last week, um, Fed Chair Powell said a couple of times, "I don't know, we don't know, we know nothing." It's like, okay, so
What
it's
the hell are
pretty
you
clear
doing?
you know nothing. Great.
Yeah.
But if you just track the Fed funds rate, if you throw the Fed funds rate over top of yield on the 2 year Treasury bill, what you'll see is that they're identical. And the rate on the 2 year has been pushing sharply up. And so last Fed meeting, there was actually a 7% chance of a rate hike. So, we're going from this environment where there were a bunch of cuts priced in this year to now all of a sudden we're talking about potentially even a rate hike because inflation is starting to pick back up a little bit, it looks like, and yields are reflecting that. So the
Mhm.
Fed is stuck, man, in a between a rock and a hard place because if they raise rates, well, what does that do to that massive debt burden that the federal government has? Not good.
Yeah.
But if
No.
they do nothing, well, then inflation could come back. So
Well, so let's start diving into some stablecoin talk. So they must have been listening to me and you talk yesterday about how USDC it does a much better job with its transparency. With its backing, because if you've been paying attention, the Stablecoin Act is a huge part of that. To be compliant in the U.S., a stablecoin issuer has to back for every stable coin that's in circulation, it has to be backed 1 to 1 with a US dollar or US dollar equivalent. And that has been a kind of a specter that has hovered over USDT, is their lack of transparency over their backing, because they have a wide variety of assets that they claim backs USDT to basically give it value. And so I guess they hired a big four firm to fully audit the USDT reserves. So it looks like they are making a very strong effort to come into compliance. What are you seeing on this before I start kind of going through the article?
Well, I mean, Tether, the company, has had a historical problem with proving its backing. So, for years, Tether's claimed that every one USDT was backed by $1, $1 in a bank account. But
Yeah,
regulators proved this to be false. So the New York Attorney General in 2021 found that for significant periods, Tether had no access to banking and was not fully backed. At one
yeah.
point, they were only 74% backed. That's what the New York AG it came out with in 2021. There was the Bitfinex cover up, where Tether's sister company, the exchange Bitfinex, lost $850 million to a payment processor, Crypto Capital, and used Tether's reserve funds to plug the hole in its own balance sheet without telling anyone. That's called
Ooh,
fraud. That's fraud,
yeah.
bro. And then the CFTC fine. So the CFTC, the Commodity Futures Trading Commission, fined Tether $41 million for misleading claims, noting that they had only held sufficient fiat reserves for about 27% of the days in a 26-month sample. So that's a problem, man. Like, what the fuck, Tether? Like, is that
Yeah.
actually backed by anything? Like, that's no good. And,
Well,
they've got
we might
bunch
find
of,
out here soon. Because if they've
yeah,
hired a big four accounting firm, that's I would say that they're going to be pulling back the curtain. So it says that they're going to conduct the first full financial statement audit of the reserves backing its 184 billion USDT stablecoin. So that's how much they have in circulation. That's 184 billion dollars worth of USDT. So that
I
we're
mean,
gonna find out.
yeah, but like, here's the thing, man. It looks like they've got a mix where it's mostly treasuries, right? Okay,
Yes.
good. Mostly treasuries. That's good. But also a lot of gold, some
Yep.
Bitcoin, and
Yep.
also this commercial paper, short term
It's
corporate debt.
and that's where you start getting dicey.
Right, right. So, whose debt do they hold? Do they hold junk debt from failing Chinese real estate giants like Evergrande? Like,
I actually,
what are they
I
holding
actually saw.
exactly?
Well, I saw a post the other day, and I'm not saying this is what they're doing at all, in no way, shape, or form, but just to show you how sketchy debt can get. Is I saw a post where it was showing people how to go and find old businesses that are dormant, but they've been around. They were formed a decade or more ago. So on paper, it looks like a company that's been in business for quite some time, which is what banks and stuff like to see when it comes to loans. And basically you can buy that for a couple $1,000, that business, because nobody's using it, nobody's it doesn't have anything, and then basically go get lines of credit like $250,000 at a time, lines of credit, to where that would be debt, that'd be debt for that company. So um yeah, I'll be interested to see what this shows, and I hope, because USDT is a massive part of crypto. Up until recently, I know it was kind of the market share of Binance. I would like to see what that looks like now, but like we reported yesterday, in certain jurisdictions like the UK, the European Union, the US, places like that, USDC is what's used, because of their transparency. of their being compliant. They sit down at the table with legislators, and they're a part of this process and making sure that they're staying compliant. As the market evolves, the ecosystem evolves. So we even reported some data that was showing that USDC and in some data points overtaking USDT, as far as
Yeah,
volumes and things like that. So,
definitely in
you know,
volume.
yeah. So USDT, I think, is starting to realize that this isn't the old crypto market where it's the trust me, bro. Trust me, bro. We got reserves. It's I think that they realize that they're going to have to. There's going to be a reckoning. They need to show the transparency. They need to show, to build confidence that they are fully backed, that they are fully compliant with these regulators to be taken seriously. There's plenty of stable coins out there that aren't compliant, but I guarantee you that they're probably not going to be a part of the future financial system, it being integrated into TradFi and things like that. So if you want to be a big boy, you got to play by the big boy rules.
Yeah, no, you're right. And are you familiar, Mike, with something called the Lindy effect? Um,
I've heard of
uh,
it, but no.
yeah, I'm reading about it right now when it comes to Tether. And look, I mean, even with the transparency issues, Tether has survived every major crypto crash and bank run.
Mhm.
So, you know, recently anyway, you think about the 2022 FTX collapse. And the reason why they've survived is because they've been able to process billions in redemptions without failing. So this has led to like a Lindy effect where the market trusts it simply
Mhm.
because it survived for so long. So, I think what Tether is trying to do is get legit access to the US market. And in order to do that, they've got to comply with the Genius Act. And that means they've got
Exactly.
to be holding treasuries and not a bunch of bullshit, So that's why they're, going through this audit, I bet, so that they can prove that, hey, you know what? We actually are holding mostly treasuries and trust us, So the Lindy effect is like reverse aging. It suggests that the future life expectancy of non perishable things like ideas or technologies or business models are proportional to how long they have already survived. So the longer something has lasted, the longer it is likely to continue lasting. That's so interesting, man. It's like aging in reverse. So that's super cool. It comes from a deli in New York called Lindy's Deli. And the observation was in the 1960s, comedians who hung out at the deli noticed that Broadway shows followed a specific pattern. So if a show had been running for 100 days, it had a high probability of running for 100 more days. If that show lasted for 500 days, it was likely to last for another 500 days. So that is pretty cool, man. That is pretty cool about that Lindy effect. And maybe Tether is, they've lasted so long just because they've lasted so long. That's kind of a weird thing, right?
Oh no,
Well,
it's yeah. Sorry, I was looking at the next news story, but
squirrel,
yeah, no, what's that?
squirrel.
Yeah, well, it's yeah. I got to multitask. Whenever we don't got somebody on the sticks, so I'm having to pull the news articles up and all that stuff behind the scenes. So the next article that I got pulled up is New York Stock Exchange goes on chain. So the New York Stock Exchange, there's been a bunch of stuff going on with this. Canton Network has a part in this. There's a bunch of different projects, but this one is the New York Stock Exchange has partnered with Securitize to develop a 24/7 tokenized securities platform, signaling a definitive shift towards always on trading for traditional stocks. We've been talking about this with RWAs, real world assets, the tokenization of these real world assets like stocks, bonds, commodities, real estate, all these things to make them, these illiquid assets more liquid, meaning that they can be traded 24/7, 365 if they wanted to. It allows ownership to be passed, with real estate, with things like real estate being on chain or stocks or commodities being on chain. There's higher auditability and transparency with as far as compliance, ensuring that that nothing nefarious is going on. With real estate, they could automate the process of what a lot of real estate agents do, as far as making sure there's no liens or loans against the property. Make sure that it's the title is free and clear. There's a lot of things that tokenization can do for us, the consumers, and for us, the investors. So this is a huge part of why, if we pull up rwa.xyz, we see that even in this, bear market, with all these prices dumping, like we see them dumping, you see, this is where I always go, rwa.xyz, and then view analytics. That's why you see that RWA, the tokenization of these assets, U.S. Treasury debt, commodities, asset-backed credit, specialty finance, stocks, all these different, real estate. It's just up and to the right. It's not even phased by this pullback in prices, because you need to understand that the growth of this technology is not correlated to these prices. This technology is being adopted. It's growing. These institutions, governments, they're building legislation. They're building on these rails. They're modernizing the traditional finance system, and the prices. We're in price discovery, as David has said multiple times. We don't know what these assets are actually worth. We've been in a speculative market driven by retail, where it's social media hype is what pumps a lot of these projects. As the actual utility and profitability of these projects are realized, and the actual tokenomics of these assets are fully realized, to where does the profitability of the company and the revenue it generates, is that shared with token holders at all?
Check this out, Mike. So it goes even deeper than that. So something happened just 2 days ago. Resolve blew up.
Yes.
And when Resolve blew up, so here's the thing. It was totally preventable. It was an exploit from someone who had deep knowledge of how to break the system. They were able to get a key, an AWS key, which was then able to be used to tell the smart contract to mint any amount of USR against a much, much smaller USDC value. And they were able to essentially, rug the project that way. But here's the thing. All they did was take USR and wrap staked USR and RLP and send them to zero. But all of the ETH in that basis trade that Resolve was running, they've still got all that. It's like $142 million of ETH. And so the reason why I want to bring this back into this stuff here about the tokenized, these wrapped strategy tokens that are referred to as stable coins, like USR was at one point, that's not what they are at all. And if the protocol still has all of that ETH, how can they make their customers whole? I don't think that there's any reasonable mechanism by which they can actually do that. I think what they could do is they could just recapitalize the entire thing and create a whole brand new USR and just mint it again and say, hey, we've still got $140 million of ETH. Here's some more fake stablecoins, USR or whatever. So like the fact that you've got all of these so-called stablecoins out there on the marketplace now, all of these, RWAs, they call themselves sometimes. Not all of it is real. A lot of it is just like some type of scheme to, generate yield for investors, but you've really got to understand the risk that you're taking, So basically, in my opinion, if it's not backed by treasuries, it's not a stable coin. It's some type of wrapped synthetic product pegged to one arbitrarily, and then maybe they give you some yield from the strategy that they run. So basically, you give these companies your USDC, your cash, and then they give you fake cash. And then your fake cash can earn like a couple of percentage points. You might be able to use it in DeFi and loop it a couple of times. But yeah, man, you gotta be careful with these, so-called stable coins.
Yeah. No, no, yeah, no. Just because it's a stable coin doesn't mean it's stable, one, and it doesn't mean that it's compliant, two. It doesn't mean it's backed by anything, three. You need to do your research on stable coins, and that's kind
Seriously.
of why I try to stick to USDC and USDT for the most part.
100%. But those can be frozen. That's the thing. Those can be frozen.
There's pros and cons, and that's going to be part of that legislation. That's going to be part of governments and banks want that ability. And as we've seen, politicians, they pander for our votes, but they do the will of banks and institutions. If you don't realize that simple fact, it doesn't matter if they're Democrat or Republican. They work for banks, institutions, and the people that actually keep them in power. They only pander for our votes. So don't want to get on that rabbit trail, but join us Thursday for the Red Pill, where we'll talk about while we're drunk. All right. So Solana's enterprise push. MasterCard and Western Union have integrated with Solana Foundation's new enterprise developer toolbox to streamline cross-border payments. Where have we heard this narrative?
Cross-border payments. Wow.
Right?
I thought Ripple and XRP was going to do all
that
that.
on lockdown.
I thought that's what they did. That was what I was told.
Yeah.
For years. Yeah.
So
I don't know. I mean, look, stable coins are the cross-border payment mechanism right now, but I think that when everyone and their mom has like 10 AI agents working for them, maybe Bitcoin will be the preferred method of payment over Lightning. That could become the preferred method of payment for bots, for the agents. I think that's going to be interesting. Yeah.
I think it's going to be a long time, and there'll need to be some stabilization of the price. I think before like banks and institutions would use any volatile asset as a medium of transfer of value. Not to say that the dollar isn't volatile as well.
No, bots, OpenClaw bots, not
yeah,
banks.
But that's what I mean though. Is I think for peer to peer, I think that Bitcoin, definitely, could be a preferred, a preferred method or value transfer. But banks, institutions, and governments, they're very slow to move. I think for the foreseeable future, they're going to be using stable coins. But I think you're right when it comes to individuals.
Oh yeah.
So
no, I agree. I think that X402 is going to be, used by a lot. Probably billions of these AI agents to make payments to each other, or on behalf of some human somewhere. So yeah, it's really interesting, man.
Yeah, and those that aren't familiar, X402 was for the most part it was developed by Coinbase, and it's on the Base network, and it's one of the reasons why I'm just so bullish on a lot of, not all, but a lot of base network projects like Aerodrome, Morpho, things like that. Even Moonwell, they're kind of a neobank, but it's the ability for these AI agents to be able to navigate paywalls and things like that was a huge step forward, and that's what David's talking about. Is being able to have the people that want to have these AI agents doing their trading for them or doing their DeFi for them, or if you just task it like like David's doing for for our company, if you eventually want to task it with paying bills, if being able to go on the web and log into an account, it has access to whatever wallet you give it access to, and it goes in and it pays for your subscriptions and things like that. Basically, kind of like a personal assistant or a CFO. So, that was a major stopping point for a lot of these AI agents, as far as functionality. So, and there's other, other applications or other mechanisms that allow AI agents to do that now, but X402 is probably the biggest one currently.
Yeah, so check this out, Mike, about X402. So it's mostly on Base and Solana because the fees are a fraction of a cent. So if it's a fraction of a penny, then all of a sudden micropayments, the stuff that you would usually think of as being native to like the Lightning Network, those
Yeah.
Lightning payments can now be made and become profitable. So that means that paying 1 penny for a single AI prompt can become profitable. Now, there's two other things that are interesting here. They can be gasless payments, meaning you don't need ETH or SOL in order to execute a payment. They can pay the gas strictly in USDC. Notice it's not USDT, it's USDC, right? But I'm sure you could use USDT too. And a facilitator handles the network fees. But then also, they're coming out with all these different token standards so that you can like identify your agents. One of them is called ERC 8004, and it's basically like an identity NFT for these X402 agents. And it tells the seller, I'm a verified, reputable agent with a history of 10,000 successful payments. So this is really where, because all of those agents that I'm building out, those claw bots, if we were to decide for some reason that we want to give them the ability to buy stuff or sell stuff, they would need a wallet, right? And you give them a wallet, the ability to buy and sell stuff, and all of a sudden they can become, a business owner for you. So really, really interesting what some people are building with these agents, and with this X402, being able to send and receive payments means there are some people really getting paid, man, really getting paid with this stuff.
No, absolutely. All right. So let's see what we got in DeFi. The year of institutional Bitcoin staking. So DeFi is moving away from degens and toward compliance. The narrative today is focused on unlocking the value of Bitcoin through liquid staking. Bitcoin liquid staking, CIMG, looks like their ticker on the NASDAQ is IMG, and Bedrock signed a memorandum of understanding, or MOU, today to build a compliant institutional grade Bitcoin liquid staking framework. What have you heard about this?
Nothing. Nothing. But the thing that comes to mind first when we start talking about Bitcoin liquid staking, that makes me think that it's not settling on the native chain. But maybe I'm wrong about that. So, I'm reading about this now. You've got the Babylon model. Babylon is one of the really big Bitcoin liquid staking protocols. And it's saying that historically, Bitcoin couldn't be staked because it uses proof of work mining, not proof of stake, right? So the Babylon protocol changed this by creating a way to use Bitcoin's security to protect other blockchains, is what it says. You lock your BTC in a special type of transaction on the Bitcoin mainnet called a time lock. You don't send your BTC to another chain or bridge, it stays on the Bitcoin network. But then the work is your locked BTC acts as a security deposit for proof of stake chains. Like, they call them Bitcoin supercharged networks, or BSNs. I've never heard of that before. So if the validators on those chains misbehave, your Bitcoin can theoretically be slashed, burnt, or sent to a dead address via a cryptographic trick called extractable one-time signatures. So the reward is that in exchange for providing this economic weight, your locked up Bitcoin, you earn rewards, often paid in the native tokens. Yeah, you don't need to lock up your Bitcoin, and potentially expose it to getting slashed or burnt in order to like earn some yield on Bitcoin on the Bitcoin network. Like there are better ways. I know nothing, basically nothing.
Well, that's kind of what you brought up. BTC Mouse brought up is, and you do all this BS to get like 88 cents.
I know. Exactly. You don't earn anything. The yields are paltry. And, so here's another thing. The problem with that is that your Bitcoin's locked. You can't trade it. You can't use it as collateral. You can't do anything with it. So liquid staking solves this by giving you a receipt token. That's what LSTs are. They're kind of like a receipt token that represents your staked BTC. So you deposit your Bitcoin into a protocol like Lombard or Solve, and then you receive LBTC or Solve BTC. And that underlying Bitcoin staked via Babylon earns security rewards, which again are like basically nothing. But you can take that LBTC, that Sol BTC, and use it in DeFi. So you could use it as collateral to borrow stablecoins. So essentially, you start with Bitcoin on the mainnet, Bitcoin mainnet. You stake it, and then you receive fake Bitcoin, LBTC or Sol BTC, and then you can borrow against that. But it's just a derivative. It's an LST. So yeah, and the yields for these things at one point when there was like a Bitcoin season, when there were all sorts of these companies popping up offering this type of product, the yields were like between like 3 and 5%. Not any longer. They're just not. So yeah, I don't know, man. There's LBTC, there's Solve BTC, there's Uni BTC. That's the Bedrock product. And that's what the news article is about, right? Bedrock, some deal. Yeah. So, I mean, look, I'm most excited about DeFi on Bitcoin natively, maybe on a layer 2, like Lightning. I'm more excited about that than I am about, some liquid staking Bitcoin. But we'll see. Maybe they can figure out a way to bring that to the Bitcoin mainnet or to Lightning Network. Maybe in the future they'll be able to.
Well, I did reach back out to Chad and Danny over there at OpNet to now that they've launched to come back on and talk get an update on how things are going, because I know that was what their project was all about, was basically native on chain native mainnet DeFi on Bitcoin. So I definitely like to hear what's going on with that and just kind of see how that's progressing.
Yeah, me too. I'm curious to see how the launch went. Maybe see some numbers around it. Just check in, see what's going on.
Absolutely. All right. So last story on DeFi is hyperliquid growth. So we've been talking about this for a while. Hype, Tron, and Canton, all outperforming Bitcoin. But Hyperion DeFi partnered with Silhouette Shielded Trading Platform. Hyperliquid is emerging as a dominant layer 1 with over 41 million hype tokens already sequestered by the network's autonomous fee burning mechanism. So as you can see on my screen, it looks like Hyperion DeFi Inc. out of Laguna Hills, California, announced Tuesday it has entered a Hype Asset Use Service agreement with Silhouette, a trading platform built on the Hyperliquid blockchain. Under the agreement, Hyperion DeFi will provide staked hype tokens to Silhouette, enabling the platform's users to access reduced transaction fees when trading on Hyperliquid. The arrangement is designed to generate revenues for Hyperion DeFi while providing fee benefits to Silhouette's users. Silhouette's platform is designed to keep trading strategies and order data private while executing trades on Hyperliquid. By pooling staked hype at scale, Silhouette provides access to Hyperliquid's lowest fee tier for all users on its platform, regardless of individual account size or trading volume. We are excited to work with Silhouette and support their platform using the unique decentralized finance primitives we have built over the past several months. Let's see if we get the meat and potatoes of this. In other recent news, Hyperion DeFi has launched an institutional-grade yield vault on the Hyper EVM in collaboration with Risk Protocol. This new vault will enable the company to utilize liquid staking tokens and stablecoins as collateral for on-chain option strategies, potentially enhancing yield beyond standard staking income. Initially, Hyperion DeFi plans to use the vault for its own balance sheet, with future access planned for qualified institutional participants. I hate that shit. In a separate development, the company has appointed Mr. Jung as the new chief executive officer, who joined Hyperion DeFi as the chief investment officer in June of 2025. He worked at Dharma Capital, where he's focused on digital asset strategies. Basically, the bottom line of this is it just seems like that Hype and Hyperion they just keep making what seems to be all the right moves. I don't have any exposure to Hype. I am waiting for, hopefully that dip that you keep talking about, David, that, if we see a pullback in Bitcoin.
I'm waiting for the dip too, Mike. Like,
I got
pump
dry
my bags, please.
Yeah.
Yeah.
I'm waiting for that dip to get some exposure to Hype.
Yeah, man. I mean, so here's the thing for me. Hyperliquid has not been through a full cycle yet. It is very, very new. And the whole idea of a crypto treasury, a corporate crypto treasury is, pioneered by MicroStrategy, strategy.
I threw your screen up if you want to show a chart or something.
Yeah, I'm just reading a little bit here. We can take a look through. Yeah, I mean, if you want to take a look through this is kind of interesting though. So here's the thing, Hype is great. If we take a look at Hype over here on a chart, take a look at the Hype USDT real quick. Hype, let me just go ahead and bring up, that's the wrong chart. We got to take a look here at Hype. There it is, Hype. So this one has actually performed extremely well. This is one of the best performing digital assets. And the problem is that it's relatively new. And, December 2024 is the data that we've got going back to. But something that's amazing about this is that it's actually outperformed Bitcoin. So, this move here, this breakout that I've got marked on the chart, as long as Hype stays above the breakout, it could just continue to push in Bitcoin terms. So, today with most everything down, we've got the highest quality digital assets up. So, Tau is hot right now. It's breaking out. You've got Hype still holding on to, most of the gains from back at the end of February, and Tron continuing to push higher here also. Those are basically like the top 3 digital assets right now. But the interesting thing about Hype is that corporate treasury is using it to bootstrap this Hyper EVM. So that's like the Ethereum compatible layer on Hyperliquid. So it's the Hyper EVM. It's the EVM compatible chain that they run. And so this partnership, that company there, we were talking about Hyperion, they have a partnership with Kinetic as, a validator, and that allows them to mint this LST called High Hype. Okay, these names are fucking so stupid, dude. Like, why can't they come up with better token names? High Hype. And so look, they also bootstrapped Felix. Felix is a pretty cool protocol over on Hyper EVM, and they're into private lending. So, that's on Hyperlend. So, there are pretty cool protocols on the Hyper EVM chain. And the best way to take a look at that would be to hop on over here to DeFi Llama and then jump on into chains and then scroll down here. You got the layer 1 that we could take a look at here. But what I'd prefer to do is just type in Hyper, and I'm not looking for the layer 1. I'm looking for the EVM. You see there it says chain. So Hyperliquid is its own native layer 1, but the EVM compatible chain is called Hyper EVM. And so this is what we want to be taking a look at, I think. Maybe it's not going to load for me here, but I just want to take a look at the protocols native to the chain. There we go. So we've got Kinetic, we've got, of course, Hyperliquid, we've got Morpho, and we've got Hyperlend. So what I'm really looking for is the protocols native to Hyper EVM. So that's going to be any protocol that is only on one chain. So if you see one chain here, that means that's a native protocol. So Risk is actually kind of cool, man. This one is, I mean, look at the TVL growth. Wow. So it's really seen some growth. So this is, it says crypto uncorrelated returns. What a horrible, horrible DeFi Llama page. But the cool thing about Risk is that this is like funky options, I think. I'm pretty sure. These are like weird types of options. They call them, I guess, covered calls, but I don't know exactly how you're executing a covered call on this. But take a look at these APRs on these, man. These are pretty good. And cash secured puts, max APRs on these. I mean, dude, this is pretty interesting, right? Now you've got premium over here too. I don't know if it's going to allow me to hop in here, simply because I'm not sure if I need a VPN turned on or not. But risk premium option income vaults. So let's scroll down here. I just want to see if there's any type of like, maybe an options chain. It doesnn't look like it.
I know you love options.
Oh yeah. But sometimes the way that these are structured is kind of suspect. So like a covered call on ETH, an ETH covered call. Let's see. So this is a little bit different than like a traditional option, I think. So this is really cool though, man. This is really cool. Now, I don't know how you get to the yields that they were talking about, though. These 100% yields that they're talking about with max APR here. I'm not quite sure how you get to that yield, but I'd be willing to bet that they've got some documents here somewhere. So there's the documents section. And this is really what I would want to take a look at, because as this is loading, we need to go through the docs to understand how risk works. Bottom line here is that there's some really, really cool stuff on the Hyper EVM chain and Kinetic. I'm not quite sure what Kinetic is. Is Kinetic that LST? That's the LST protocol, right? And then Hyperlend. Yeah, so this is non-custodial liquid staking. Yep. So this is the liquid staking protocol over on Hyper EVM. And then over here, we've got Hyperlend. So there were actually some really great, like lending opportunities over on Hyperlend the last time I was over here. So let's just see if there's anything like that. If we hop on into markets real quick, I would just want to go ahead and sort by supply APY. Just want to see like what can I earn over here. So it looks like this PT. It must have that already expired, that matured. So this is not valid anymore. You see the total supplied, $1.45. I'm going to sort by total supplied instead. And going through K hype, I think that's the LST. Here's hype, 0.5%, it's nothing. 4%, 5% on USDT, not good enough. USDH, 3%. 8% on Universal Sol. No, thank you. USDE, 11% on USDE. What?
Interesting.
Wait, what? How does that make sense?
David's ears just.
This is, yeah, dude. This is actually really good looking, but I don't want to connect. I don't want to connect to take a look at anything in the market. So USDE deposits are still far away from the cap. Wow. So how is this generating 11%? That is a good question to answer, but I definitely like that. Deposit into this vault on Hyperlend, deposit USDE, earn 11.7%. I'm assuming this is a variable yield, but man, that looks pretty interesting, Mike. So now if we hop back on over here to DeFi, that looks
be a nice looping play.
Potentially, yeah. I mean, it depends on what they allow you to borrow against it, if anything. But taking a look back on over here at DeFi Llama, that was Hyperlend. That's the bigger lending chain, native or lending protocol, native to the Hyper EVM chain. Volantis, I'm not quite sure what Volantis is. Modular DEX. Oh, got it. Hyper EVM DEX. This is interesting. So TVL has definitely moved to the downside this bear market, but I'm curious to see what a native EVM Hyper EVM DEX looks like. So it looks like if I click explore here, we can deposit. So deposit on a DEX, that must mean like a V2 LP, stake, swap, positions. Okay, so if I hit explore, then maybe I want to take a look at like stake type. That's the AMM, it says. So that means, yeah, this is a V2. This has got to be a V2 LP. Yeah, stake type LP to earn yield and points from swapping fees. Okay, so pool composition. This is funky, man, because it's like not made up 50-50 of two assets. It's made up of a bunch of different assets. Um, so that's
So,
that's
so
kind
it's,
of interesting.
so it's more like a vault.
That's kind of what it looks like. It looks more like an AMM LP vault. It says they use the STEX design. I haven't heard of that before.
That's
Oh, you know what?
interesting.
Yeah, I'm actually sharing the wrong tab. So this is Volantis. I forgot that I was sharing the wrong tab there. So this is that Volantis Dex, and it looks like they've got these two, like, they look to me like, pools where you can deposit tokens, become an LP, earn this yield. But the pool composition is not like the traditional 50-50. You know, uh,
Mhm.
it looks like it's, composed of a bunch of different assets here. And they said that they use a STEX design. I've never heard of
I've
that
never heard of
before. That's kind of interesting, And then we bring it back on over here to DeFi Llama. So that's the DEX on Hyper EVM. Volantis, the bigger one. We took a look at Kinetic, the LST protocol. Hyperlend is the money market, and then Felix. We also took a look at Risk. So, but I think Felix, let's see, is also a money market. So this is, if we take a look at Felix real quick, I think that this is another lend borrow protocol. You can call them lend borrow protocols, you could call it a money market, but this is kind of what I'm used to looking at a little bit more than something like Hyperlend. Just the way that this is formatted here. So if I go ahead and sort by available liquidity, we've got a ton of K hype, liquidity. So, I mean, you could loop this up, hype and K hype. You could run some type of an interest rate arbitrage here potentially if you wanted to, and also farm some points at the same time. So I wouldn't necessarily want to borrow USDC against this LST because I don't think that I'd want to be levered long hype. And that's what you would be if you supply K hype and borrow USDC. So I wouldn't want to be just levered long. But maybe something like this, wrap staked hype and hype, earn some points on the collateral and lever it up by borrowing the underlying asset.
Mhm.
That could work. Really depends on what you earn on wrap staked hype and what the points are worth. So if you're earning 5% on wrap staked hype, which I doubt you are, but let's just say that you are, and then you're borrowing hype at 1%, then it really comes down to like how much leverage can you use? You can use 86% LTV. So in order to understand that, we've got to hop on over here, Mike, into this education that I built out yesterday for a client. I built it for
Hell yeah.
myself, really, and I
Yeah.
decided to, deliver it during a private session with a client yesterday. So take a look at this, man. This is like the
Well,
most important stuff.
and what David's talking about is that one-on-one coaching that we offer, on the Node.pro. If you're interested, this is the kind of thing that he does. Is he does an actual consultation one-on-one with you on a call, finds out what your goals are, finds out what your budget is, your risk tolerance, all those things, and helps you develop these tools to maximize your earning.
Yeah, it really comes down to building a skill set. That's what it comes down
Yeah,
to. Learning how to operate on chain, and then you got to take that to the next level and, really start to structure. It's financial engineering. That's what you're doing. So you got to understand how to do that. And if we're taking a look at something like, what was that protocol that we were looking at a second ago? Not Hyperlend,
risk.
but yeah, talking about Felix. Felix. So if you're over here on Felix, let's say, and you see something like a vault here with an 86% max LTV, supplying an LST and borrowing the underlying, and the borrow APY is 1%, well, okay, let's say that on the collateral, okay, let's say that you're able to earn, because you know what the borrow APY is. I'm sure that's variable, but you know what that is for now. So what you can figure out is, all right, well, if I've got, let's call it an 83% LTV, Well, then that means I can run a maximum of 5.9x leverage. So that's your max leverage. Just keep that in mind. And now let's see, okay, what would the spread be? So if you're supplying that LST at 5% and you're borrowing at 1% and your multiplier is 6x, then all of a sudden you can do 24% damn near delta neutral on hype. Pretty cool, right? That's pretty cool.
That, that's a nice return.
Yeah, well, I mean, it relies on made up numbers because I have no idea how
Oh
much you
yeah,
actually
yeah, yeah.
earn.
But I mean, but
Yeah,
if that was the case, that would be a nice return. I'm all about. I'm not. I don't chase the hundreds or thousands of percent APY. I I honestly, I just have my little nest egg, and I just want to earn a steady 20, 30, 40%. I mean, to me that would be a dream. Because that's a nice. If you have a decent nest egg, $100,000, $200,000, something like that, on $100,000, if you're making 20%, that's an extra 20 grand a year. You add that to what you're already making. That's awesome. That's like what, like about 1,300, something like that, like $1,300 a month extra.
yeah. I mean, look, the way that I think about this is, I'm just looking to minimize my directional risk as much as I can,
Yeah,
and earn the greatest yield that I possibly can,
yeah,
while taking the least amount of smart contract risk possible. So, like,
absolutely.
I would really need to dig in and find out what is WST hype.
Oh,
That's the
I
thing.
wasn't speaking
Yeah.
on this specifically. I just mean in general. If you can find, don't scoff at, 15, 20% like it's nothing. I mean, in my opinion, depending on your risk tolerance, I mean, that should be where the majority of your, of your, DeFi should be focused, is, in that, 15, 20% range. Yeah, you can do some degen stuff, with a small, portion of your portfolio that you're comfortable with, potentially losing, to, lever up and, try to get like 60%, 70%, 80%. But a lot of times slow and steady wins the race. And that kind of brings us into our topic, for this show, which is, kind of this Clarity Act and, the, stablecoin yields and plays that, we talk about and that, David teaches in DeFi University. But, it's important for us to keep our finger on the pulse of what is going on with legislation and how it's going to impact, our DeFi plays and our crypto plays. So this morning, I was seeing a lot of clickbait posts and engagement posts, and rage posts about, basically people saying that they're taking away every aspect of stablecoin, earning that available to us. And in a nutshell, the fact is that they are, because banks want a monopoly, and I don't agree with it, but it is what it is. They are lobbying to make sure that they are the only ones that can earn yield on static, stable coins, or liquidity, because that is what the majority of their business model is based off of, is being able to lend that out, that fractional lending, or fractional reserve, that of lending that they do. So, however, as the legislation reads right now, there is still plenty of other ways to earn yield. You can still lend it out to earn yield. You can still you can still provide it for swaps. Like in liquidity pools, you can still lend it out for cross border payments, or remittances and things like that, and earn yield. So there's still DeFi plays that you can do with stable coins, even if it was signed, what's written in this legislation was signed into law tomorrow. So it's important to understand these things. So let's start diving into this, David. I mean, what are you seeing, as this legislation evolves? What are you seeing that is, both cause for concern and cause to not be concerned?
Well, I certainly hope that we don't get a change in the Congress this November.
Yeah, for the
Because
midterm. Those
yeah,
that
because
those that don't know what he's talking about, in November, we got the midterms. So halfway between the presidential elections, you got congressmen and senators and all that have to throw their hat in the ring.
yeah, here's the thing. There are some senators, think, Karen, what's her name again? Pocahontas Karen.
Oh,
Um,
Elizabeth Warren, the one that was
yeah,
waging war on crypto for the banks with Gary Gensler for years and
exactly,
years.
man. Exactly. Yeah. So I think basically what she wants to do is make DeFi illegal. Like,
Mm.
that's basically what
Oh,
she
in
wants to
our
do.
perfect world, yeah, because if you look at how she's made the majority of her money, it's basically from the banks paying her off because you don't
Right.
make 180K a year and have the lifestyle and the investments that she does.
Yeah. No, none of that's ever made sense to me. How in the world can a congressperson making, $20,000 a month, which is a lot of money, but
Yeah,
how can you go from making 20 grand a month to all of a sudden you got 30 million in assets? Like those
yeah,
two things are hard to square,
yeah,
because if you're a congressperson, you're not a professional investor or a
yeah.
professional trader. But somehow these
But
Congress
Nancy
people,
Pelosi's husband is, though. I mean, check that out.
I
Yeah,
guess,
yeah,
I guess so. Like
right.
that's bullshit. Like, and the same thing with Elizabeth Warren, man. And there's so
Yeah,
many examples of these people where like
who
they
happens to
get
sit
into
on the finance
Congress,
committee,
right?
by the way.
They get into Congress, and all of a sudden they go from broke to how did you get that $30 million? Like,
Oh,
how do you account for that?
AOC was in massive like student debt. Her credit was so bad because she was a bartender. Her credit was so bad she was complaining that nobody would rent to her in Washington D.C. And now all of a sudden she's worth like $40 million.
Yeah,
And
and then
she
she shows up to a Met Gala wearing a fucking dress that says "tax the rich." It's like, well, what are
right,
you? Like, how did you get all this wealth? Like,
yeah,
what value did you provide to people in order to earn that wealth? I don't see
yeah,
it. But if we bring it back to the Clarity Act, like, here's the
yeah,
thing, man. If those people get into power in November in the Congress, they will do everything in their power to kill any piece of legislation that might be good for crypto. So
yeah,
that means this Clarity Act, you could kiss that goodbye, or
yeah,
they'll put forward some like a butchered version of it that
mhm,
basically strips all the rights from people and gives all the power to these banking cartels.
yeah,
So this yield compromise, which I think is a bunch of bullshit. But on Friday, March 20th, my birthday, Senators Tom Tillis and Angela also Brooks. What? Also Brooks, of
yeah,
course, a Democrat from Maryland, announced
yeah.
an agreement in principle regarding stablecoin rewards. What in the hell does that mean? An agreement in principle regarding stablecoin rewards. So the passive yield ban. So they're saying to prevent a bank run where everyone moves their savings to stablecoins, the deal bans passive interest. So you got to think about what they're doing here. They're saying these stablecoin products are superior to TradFi banking products. And so if we were to allow people to earn yield using these
You,
superior products, the
you'd see
banks,
around $6 trillion freaking disappear from banks, which would collapse the whole freaking house of cards.
well, just think about what they're saying though. They're saying that there is this superior product that could exist. We can't allow that to exist because
Yeah,
like because
because
why
because
exactly?
because the people that make us rich and keep us in power says that it's not a good thing.
Right. And so now they're saying, okay, well, you've got to do some activity, with your cash in order to earn yield. When really, you don't have to do shit to earn yield. You could just hold the token to earn yield if they would make that legal. But this
Yeah,
has intentionally been made illegal. And it's a
mm,
complete scam, man. Like, we should not have Congress people who supposedly represent us doing the bidding of banks that pay them. Like, we
Yeah.
can't have that, man, because if we're the ones getting screwed here. If you
Yeah.
don't know how to operate in DeFi, then you're not going to be able to get, yield like this. You should be able to just earn passive yield on your savings. And,
Mhm.
that would be what should happen. That's been made illegal to prevent, banks, which really just are horrible, basically like rent-seeking institutions. These banks, man, these banks, and the way that they own these Congress people is just horrible. But you've got industry leaders from Coinbase and other major institutions. They're going to be on Capitol Hill. They are right now, actually, March 23rd and 24th. They're reviewing the final text. So a committee vote is expected in late April. Okay. So we've still got a couple of weeks, to hear the gossip about what's going back and forth in the verbiage of the bill before there's actually some type of committee vote on it. But yeah, man, it's not good. It's not good to say that a superior product can't exist for consumers because it would be bad for the banks that give us money for our
Yeah.
campaigns. That's just not a good look, man.
But
So
before we drive on, Run Romer. I'm not going to dox his real name, but he's going to be on the show tomorrow with us, and he was saying that he'd love to talk a 20% strategy in TradFi. Maybe that's what will make the bulk of the show about tomorrow is just strategies. Just some of the strategies that people could be doing right now in a bear market to earn.
sounds good to me. You see what Crispy
All right.
said about 40% on virtuals on
Yeah.
on Teller. So here's the thing about a play like that. Number one, how much do you trust Teller? 1.4 million TVL. And if I just take a look at the Teller protocol, just real quick, I actually just brought it up. Um, let's see here. So if I go to earn, I'm assuming that earn is just, earn and borrow is the same thing, really. It's just their lend borrow protocol. What I'm looking for is that virtuals market. So here we go. Let's see here. I'm going to go ahead and sort by yield. I'm assuming that this is, just yield.
You
Look, there's
might need to
300.
share that tab. We're
Oh,
still
got it.
we'll still
Yeah,
yeah.
awesome. There we go. So I'm sorting here by yield. I'm on the earn tab. This is tokens. So this is single lending, but there's no supply. There's not really any supply here. So I'm looking for virtuals, he said. So here I'm just sorting by supply now. So there's some USDC here. There's some wrapped ETH here. 6% on ETH. That must be incentivized. Yeah, so 2.97% native, and then there are 3.3% base. That's the native yield, and then the additional rewards. It looks like, but if the additional reward is paid in ETH, that's pretty cool. That's pretty cool. USDS 8%, not bad. Where is virtual? Where is virtual here? I don't know. Okay, earn. That's tokens. How about farms? Earn in farms. So farm DEX yields without long tail exposure. Okay, borrow LP assets, no margin calls. Oh, I remember this one, how Teller works. This is the funky one. They allow you to like lever it up, right? I think so. I think so. But wrapped ETH USDC via Uniswap, it's talking about 38% in trading fees. Let's take a look at this. So managed by VFAT, LP range. So this is this full range? Is that what this is telling me here? So if I deposit 100 USDC, it should be like 50-50. Oh, and look at that, borrowed ETH and borrowed USDC. So it's saying my total APY is going to be negative 61%. Make that make sense. What the hell?
Right?
Yeah. So no, not going to work for me. But this is kind of
Hard
cool.
pass.
Yeah, I'm gonna hard pass on that one. But maybe do they have anything like really correlated here? like an ETH wrap staked ETH pool or something like that. That would be kind of cool, because the correlation means that you've got much, much smaller negative gamma. And that's what you want, because that means that your fees are actually profit. So I'm just scrolling down here looking for something super correlated. Basically like an ETH pool, or a Bitcoin pool, or a hype pool, or like an LST pool paired with the underlying, something like that. And so now here's vaults. Okay, so this is corporate bond, Oracle corporate bond vault. What the hell? That's kind of cool. Corporate bonds, Apple, permissionless vaults, bespoke yields. How in the world are they doing this? It's got no TVL, but that's kind of interesting. And then if I go over here to Loop, let's take a look at the borrow tab, and let's take a look at Loop. So Apple on, oh yeah, so these tokens, ON, which one is that, Mike? The stock, the tokenized equities that end with ON. I think we were
Would that
looking
be
at
Ondo?
that. Is that Ondo?
That
I think
might
it
be
could
Ondo.
be. So I mean, look at this, Apple ON. So it looks like you've got to supply this token first, and then the loop path. So if you borrow USDC to loop your Apple, that's like buying Apple on margin, which is kind of cool. But what does plus 73% mean? So collateral amount, let's say 100 shares.
What's the
So
ticker for
get
Apple?
AAPL.
AAPL.
AAPL, yeah. So 100 shares of Apple, and it says interest 2%, roll over, time window for, yeah.
Apple ON is Apple tokenized by Ondo.
Got it. Yeah, so this is kind of cool, man. This Teller protocol allows you to loop these. What does get more mean, though? I have no idea what get more means.
Is it spelled MOAR, more?
No, it's not the right type of more. It just says get more. And when I take a look at this, so I need to layer a little bit here, about this get more. But this is really cool, man. You can supply a whole bunch of tokenized equities over here and loop them up. You just got to be careful of how much you're paying to borrow to loop it. But that is
and
pretty
how deep is the
cool.
liquidity?
Yeah, not much. I can't tell
and
here,
the
really.
protocol, how, what's the security like on the protocol?
So here it's saying short. So that must mean like an automated short position. So delta neutral arbitrage opportunity on Bard. Delta neutral arbitrage of 280%. Oh, dude, this is a funding rate arb. Is this an automated funding rate arb? That is so cool, man. So here's Bard. So you're short Bard with USDC, paying 1% to borrow. Wow, that's great. You're long Bard on Bybit, earning that funding, and long Bard on Binance against your short position where you're paying nothing to borrow. So that is pretty cool, man. That is pretty cool. Yeah, I wonder if this is real. So if I go ahead and sort by available,
Let's do some research on it. Maybe reach out to the team and see if they'd be willing to come on.
I'd love to do that. Yeah, I mean, look, 20% almost on WorldFi. Not quite sure what WorldFi is. I think it's just like like they own crypto, but the token isn't really connected to that crypto in any meaningful way. Can't quite tell what WLFI actually does.
But isn't that the World Liberty 5 freaking token?
Right, yeah. And then over here it says trade stocks. Awesome. Dude, great. So I can trade Micron here. So how exactly does this work? Micron technology on Ethereum. So if I want to buy this, let's say I want to buy this with 100 USDC. It says that I can buy Micron. Does that mean that I can buy fractional shares? It must mean that. Info. So here's the this is an Ondo an Ondo market. Wow. So is this legal? Is this legal for Teller to offer this, you know, to American citizens, like without a
I
VPN?
no clue.
Is so I've got actually my VPN turned on. That's probably why it's working. You know, I'm connected to Sweden and Singapore, so they have no
Yeah.
idea who I am.
I'd be willing to bet the answer would be no, just because that there isn't clear legislation on it.
Yeah, how stupid is that? That we can't even, as Americans, trade American companies, but foreigners can because they
Well,
haven't
how
figured
stupid
out how to
how
like tax us on it.
how stupid is it that that we allow the government to tell us what we can and can't invest in? Like that whole accredited investor. You can't invest in these very reputable, very solid investments because you don't have enough money.
Yeah, man, it really is a shame. This is kind of interesting. You see this Teller GPT? This is kind of cool. So they've built some cool stuff in here. So this is when I clicked on Spot, when I clicked Trade Spot, it just brought me to Teller GPT. I don't know that I am not connecting to this. Like, no way. Um, you know, so yeah, but this is kind of a cool little protocol here. I just my gut tells me not to trust this. That's what my gut
So
tells me.
no, it's not. I'm wondering if it's Teller Finance. I'm trying to find him on X so I can message him.
Yeah, this is teller.org.
How's
Teller.org.
it spelled?
Teller.org. I mean, look, for me, the only reason why I'm a little bit hesitant around this one is like the memes. Like, look, if people are coming into this with like real money, I don't know that I would really want to see like memes on here. And just the way
So
that this is formatted is, yeah.
so so Jeff, blockchain report. Jeff, he's following him. Cointelegraph is following him, and they got 20,000 followers. Um, do with that as you will. Um, but yeah, I'll send them a message here in a second and see if they're willing to come on. We can
I'd love
get it
to,
straight.
yeah. I'd love to talk to them, man, because they've got so many interesting products over here. And
Mhm.
I wasn't able to find what I think one of the guys was talking about. Crispy.
Oh
Crispy, I think, was
yeah,
talking about
Crispy
virtual.
says space shouted him out.
Yeah, man. Hey, that's great. That's definitely a vote of confidence for sure. And I want to be able to learn more about how some of these products are structured. Like when I go on over here to Loop under the Borrow tab, and it gives me the option to like loop Apple stock, Ondo Apple stock. What exactly does get more mean? And how exactly does this work? Um, maybe I can just go ahead and take a look at the documents instead of waiting. Let me see, where can I find some docs here? Custom loan, that's interesting. Long tail advanced. Let me take a look at advanced. What is advanced? Wow, this is better. So the formatting of this is better. Um, okay, so this is pools. So these are those automated pools, right? I think that these are automated, but liquidity looks like very little. So can't quite tell exactly what I'm looking at here. Maybe this is just like a full range WBTC USDC pool, but it says yield 0. And a second ago it said that it's got 98K in liquidity, but when I click through info, okay, there it is. There's the liquidity. But why in the world would anyone like deposit in this? Okay, so here's a loan history, deposits, withdrawals. Maybe this is used for something else within the protocol. Not quite sure. Here are pairs. So we've got these look, there's not 100 billion, there's not a 10,000 billion in liquidity in this prime pool. So there's not 51 billion of liquidity in this pair. You see this is all broken here, where it says under pairs and liquidity. Like this is not real. And then when I go to loans, this just kind of is spazzing out here. So what exactly am I looking at? Loan collateral, amount, okay, APR, duration. Are these custom loans? These custom loans that they were talking about here on the bottom. So ready to borrow with no margin calls, connect your wallet, select collateral terms, deposit and borrow. No margin calls due on market dips, repay on time, receive collateral back, extend a loan anytime. So collateral to deposit for a loan. How about I want to deposit some ETH? How about that? I hit enter on ETH and no tokens available. How about WBTC? How about that? Deposit some WBTC, no tokens available. Okay. So how about USDC? Is that going to give me anything? Nope, doesn't look like it. So there's some functionality here that doesn't work, which is never a good sign. But maybe they're just working on it. I don't know. I want to give them the benefit of the doubt here. So I mean, it just looks like it's incomplete. Like the protocol is incomplete, but it does have some interesting functionality, no doubt about that. And I would love to, learn some more about it and talk to the guys who built it. Really, I want to take a look at their documents section. That's really what I want. So I'm back on over here at teller.org into the docs section. And what I want to do
They've been
here.
around a while. Their X account is from December of 2019. I just tried to send a message and it said that the message failed. Oh, there it goes. All right.
Yeah, so really what I want to learn a little bit more about is I want to learn more about those loops, those loops using the Ondo tokenized stocks. That's really what I want to learn more about.
Well, really quick, let's if you don't mind, let's shelf this for a minute. I want to finish up our conversation about stables, and maybe we'll hear back from the team, and they'll have somebody come on the show and let them walk us through it. Let them pull up and kind of show the pull back the curtain a little bit, maybe show some of the TVL and how a lot of these different DeFi plays, kind of where the yield comes from, because that's an important aspect to these protocols is they can throw up any, and I'm not saying that's what they're doing, but a protocol can throw up any pie in the sky yield, but how are they generating that yield to pay out liquidity providers is a massive part of is it sustainable?
Yeah, one thing for me when I take a look through like the documents for a protocol, if the documents for the protocol are not like really good, that is a red flag. And that's a red flag. And these documents suck, dude. Like these are really thin. And they don't even describe like some of the functions on the protocol. So that's not a good sign. But yeah, kind of interesting products though. I'm just like, I'll pass, man. I'll pass on that until I learn more about it or can talk to the people who are actually building it. Just because I don't know, there's just too many things here. Too many things here for me that are red flags. And you see what Ron Romer is saying in the chat. TVL is bleeding on Teller. It's a no-go for me. I tend to agree. So here are the red flags that I see for. And look, I do this for a living, dude. So like I see protocols every day. And number one, the formatting, the way that the protocol was formatted, that was a red flag for me. Number two, like seeing things broken on the protocol where it's showing that there's like 10,000 billion in TVL on one of the things, links that don't work, taking a look at products that don't have documents to describe how they work. That's a huge red flag. I didn't even look for audits, but I'm assuming that this has been audited by someone somewhere. And if I take a look, this is lending pools, delta neutral, urine vaults, built-in strategy. So it doesn't really describe I didn't even see this. This is not how the protocol looks anymore, which is kind of weird. There's
Yeah.
a delta neutral API, which I just clicked on, and now it's taking
Well,
me to this
like I
API.
said, let's shelve this. We only got about 15 minutes, and I really want to finish, kind of the topic of the show with the stables, and let's see if they even answer back. If they answer back and come on the show, we'll let them, let them kind of, set the narrative, and we can ask some probing questions, and you can bring up, some of these red flags that you see, and let them address them. Let's see what they have to
Yeah,
say.
yeah, I'd
Because I mean,
love that opportunity.
yeah. No, I mean, and I would love to have, and maybe I'll actually, I'm going to put that on my to do today. I'm going to reach out to a couple of protocols and see about getting them on the show.
Yeah, man. I mean, yeah, I would really like to ask a couple of questions to find out, how do their products work? Have they been audited? If so, by
Yeah.
who? Stuff like that.
Shoot me a message on Slack, David, if you have any protocols that you want me specifically to reach out to that you're interested in talking with, because
How about
ultimately you're going to be the one
how
interviewing them.
about World Liberty Financial, bro? Let's get Trump on. Let's get President
I
Trump on.
actually, I think it was the COO or the CEO of World Liberty Fi. I was actually on a show. I was on the Mario Nufal show with him. I was actually today was supposed to be on the Mario Nufal show, but it's during our show. But I was actually on a show with him and chatted with him quite a bit before the show went live. So maybe I'll try to reach out to him. If he remembers me, maybe I can get him on.
That'd be awesome, dude. Yeah, but how about like one of Trump's sons that's running World Liberty Financial? That would be
I
great.
doubt I can make that happen, but
You
I, I,
sure?
I might, I might be able to, pull the, hey, I'm a retired veteran card, and
Just
and get
just
the.
tell them that you own some Trump coin. You know, just
There you
tell them you're
go.
a
There you
proud
go.
token holder.
That's right. That's right.
Yeah.
So I want to just, for the last bit of time that we have, I want to dive into, the, activity loophole that is still potentially going to be available to us in DeFi if, the legislation passes as written. So, crucially, the act permits activity-based rewards, as David was mentioning earlier. You can still earn if your stable coins are being actively used for payments, cross-border transfers, or as collateral in verified DeFi protocols. So, how to profit from stable coins now? The old hold and earn model is being regulated out of existence. The secret to profit has shifted to three specific areas: activity based rewards, the risk level is low, and how it works. Using USDC integrated apps like the new Circle Payments Network that reward you for transaction volume rather than idle balances. Have you used any of these at all, David?
No, I can't say that I have. But I'm just reminded of yield bearing stable coins, which are, almost all of them like basically like wrapped. They're going to be categorized, I think, as like high risk securities. That's at least that's what it looks like. But when I think of just holding a token and earning yield, I think of, either some type of rebasing mechanism where that yield gets like wrapped into the token price or a number go up over time. Or I think of like, you get airdropped more of the tokens. But most of these, you just rebase where the yield accrues to the token over time. So those types, it looks like, Mike, those are going to be categorized as algorithmic stables. So they're going to be treated under this framework as high risk securities, which really sucks, man. If basically, if the Clarity Act, if whoever's writing it isn't careful, they're going to push a lot of builders out of the United States
Yeah.
because anyone who wants to build really cool financial products can do that now. But if this regulation, treats those financial products as competition for major banks and therefore makes them illegal or like highly regulated, well, then that doesn't mean that people aren't going to build them. And it doesn't mean that Americans aren't going to use them. All it means is that that industry, that innovation will be pushed out of America to Southeast Asia or to South America or to, basically any more friendly jurisdiction. So I really, really hope that that does not happen. I want it to stay here. I want the innovation to be here. That's why I moved to
Absolutely.
Florida. One of the reasons why I moved to Florida was to be closer to, the hub of crypto in Miami. And, you know, if this regulation ends up like stifling innovation in this stablecoin space, or even worse, if it ends up handing it off to big institutions, well, then, that's just not in the spirit of what crypto is. Crypto is like a libertarian movement, and it's all
Mhm.
about sovereignty and,
Mhm.
ownership and custody and, responsibility, really. But I don't want to see all of the builders get forced out of the US
No,
because, hey,
absolutely.
man, like if you can't create some of these stablecoin products because they're regulated as high risk securities, well, then that doesn't necessarily mean you don't build. What it means is you just leave the United States and you build somewhere
Yeah,
else. I want to see that.
absolutely.
Yeah.
So the next strategy is DeFi lending, like Aave, Morpho, platforms like that, borrowing and lending platforms. Risk level medium, and the Clarity Act focuses on issuers and exchanges. Decentralized protocols like Aave still allow you to supply USDC to earn supply APY from borrowers. I know that we talk about these quite a bit, Aave and Morpho, and but it's what is it? Do you think that that is going to? I potentially see that coming under threat as well, by banks and institutions, because basically it's providing the service that they're providing that they have a monopoly on right now. But we earn the yield, not them. I potentially could see where they could have a finger in the pie, if they got involved with these, lending protocols and, was able to, earn some of the, the fees and things like that. But what are your thoughts on, do you think that they're going to fight these borrowing and lending protocols, or do you think that they're going to find a way to integrate themselves into it, instead of trying to, basically
Yeah.
legislate that?
I don't know, Mike. I think it depends on who you mean by they. So if you're talking about
Just
like
like the banks and
banks,
institutions. Yeah.
yes. If you're
Because I mean,
talking
that's
about
basically what they do with
banks,
our deposits, right? Is they lend out our money and make yield on it. And
yeah.
that's the monopoly that they want to keep. So do you think that they're going to, use their influence to get legislators to, basically eliminate this aspect of earning, yield for us? Or do you think that they're going to actually try to, adopt it and, just find ways to, profit from it in other ways?
I think they're gonna. So if it were up to the banks, I think they would
Yeah.
try to make using these DeFi money markets illegal.
Okay.
That's why, I think Elizabeth Warren, like if the Democrats were to, get into power in Congress after November, I think that'll be what they try to do, is try to make DeFi illegal. But if you're talking about like, institutions, maybe not banks, but maybe, government institutions, um, aren't government institutions supposed to be there to like, serve the people? Well, these DeFi
Supposedly.
money markets, man, yeah, supposedly. So these DeFi money markets are great. There's so much opportunity on these money markets, and depending on where you go, whether it's Aave or Morpho or Euler, or maybe you want to automate the process of looping, you head on over to Contango, or maybe you want to supply some, like a crypto bond, like more exotic collateral. So you head on over to Pendle first and then get that PT token and use that as collateral on a money market. All of the engineering that is available to you now using these, DeFi money markets, I think that they would try to make that illegal. I think that that's what
Yeah.
they would try to do. It
Well,
wouldn't
let's.
just be like, yeah.
Oh, sorry, I didn't mean to cut you off. We only got 5 minutes, and I just saw Don's message. I guess he's busy with a house repair, and so you're going to be doing DeFi High today. So I know that you got to probably jump off here so you can get set up over there. But let's do this last one real quick. Tokenized treasuries, RWAs, products like Circle's USYC or BlackRock's BIDL allow you to hold a token that it itself is a share of a treasury fund, effectively bypassing the yield ban.
Hey, man, great. Like bypass the yield ban. It's just such a strange thing that we're even talking about a yield ban, you know?
Right?
Like, for anyone who knows anything about this stuff, um, I saw one of the guys in our group, Yuri. He was posting on X the other day. He said most people diversify assets. He said I diversify jurisdictions, and
Mm.
that is a really, really great thing to do here, man. Because look, if living in this jurisdiction means that like things that should be available to me are not, and they are made
Yeah.
illegal, well, then someone with the means to leave might leave, might
Yeah.
leave. So,
I potentially would. I mean, it's. I mean, yeah. I mean, I served the country for 22 years, and we're supposed to be a free people, and the government's supposed to work for us. And if they're actively drafting legislation that take away our liberties and our freedoms, and give more power to banks and institutions, it ceased to work for me. It ceased to work for us, and I have no problem leaving and going to some place that is going to allow me to be more free.
well,
Sorry, not
right
sorry.
now, things are looking okay, right? But I just really, really don't want to see, this type of DeFi be made
Mhm.
illegal.
Yeah,
And we'll see how this Clarity Act really shakes out. But Americans should have the ability to earn yield on their assets that they're holding. It should not be made illegal. So
absolutely. Well, David, if you want to go ahead and jump over to DeFi High, get that set up, then I'll just kind of wrap us up. I'll just kind of show everybody where to find us, and kind of show them the socials, and I'll probably jump over there and hang out with you over there.
sounds good, Mike. I'm gonna hop on over, man.
All right, we'll see you in a minute.
Peace.
Peace. All right. So real quick, just to wrap things up, I appreciate all of you joining us. Everyone in the chat, and the contributions that you guys give, and girls, as far as your input and showing us these new protocols. Places where you're earning, and educating us on some of the things that you're finding in DeFi. There's so much going on in crypto and DeFi. It's hard to keep up. So we do appreciate all of you in our Discord. If you want to join that, links on our YouTube channel. But again, thank you to all of you out there on Arena and X and YouTube and Twitch and Kick and all the places that you're all watching. But if you want to follow us, we greatly appreciate it. Most of what we do here, 80, 90% of what we do here, we charge nothing. Our Discord, it costs nothing. YouTube channel, obviously nothing. Most of DeFi University costs nothing. But if you want to find us at the node_channel on YouTube, over on X, just find us at the node channel. And our official website, thenode.pro, you can watch us live. You can access DeFi University. You can access the private coaching with David. Our AI newsletter right now, you can use it for free. I said the F word. You can use it at no charge. It's going to be $20 a month once David is done this week or next week, setting everything up. But if you want to go check it out, just come up here to the newsletter, hit subscribe, and you have access to it. So just sign up, and you'll be able to generate a newsletter and kind of test drive it and see what you think. But let's see. So yeah, you got the courses, you got DeFi University, you got the community, but where you can go and check out our Discord, one-on-one coaching newsletter, and DeFi Don is going to be launching our store here soon, where you're going to be able to buy hats, hoodies, T-shirts, thong, whatever. Maybe we'll have thongs or something like that. But yeah, it's another way to support the channel. We're again, we just actually became a business about a week ago, and we're trying to take this to the next level. We're trying to have an actual network. Over here you can see, we have, the node, the actual chat, show you're watching now. We got Crypto and Chill twice a week. We got the blockchain report 3 times a week. We got DeFi High 5 days a week immediately after this show. Me and Drew over Blockchain Basement, to be determined what day. But once a week, we're going to do Sovereign Soil, which talks about homesteading and emergency prep. David does a daily wrap up, market wrap up. So, Monday through Friday. Saturday nights, Jeff does his DJ set. Thursday nights, we do our drunken degen debate called the Red Pill. And Ellie and Jay, they have their gaming stream on Sundays. And, they might, randomly stream throughout the week. But we got a little something for everybody here. So, yeah. And all we ask is that you give us a like, a follow, and a share. That's not much to ask for, the free alpha that we bring. So let me see if he's live over there yet. Hold on real quick. Let's see how he's doing. I'm just going to log in real quick. Make sure he's live before I cut this one off. All right. He's going live, so we're going to cut it off here. But if you want to come over here to YouTube, you can watch. He's explaining. That's next up if it doesn't live read. Until next time, Veteran